So we are going to, in this session then now, not actually spend any time on slides or anything. I literally want us to go to the caseware file. The caseware file that I'm using today is the one that we also used in the finalization session. Well, I just wanted to get a document for the evaluation of misstatements, 0240. So you can probably open any caseware file if you want to follow along or if you want to see. But so it doesn't matter so much exactly which one you have or whether you've got the same one as me, but I didn't create a new file just for that. So that's why I'm just using the one from wrap up, even though one of our exercises was not actually a wrap up one, but that doesn't really matter so much. We can at least still see what is in the working paper and work from there. All right. Good. So then that's the evaluation. So that's under finalization. Now, we want to evaluate the misstatements, but not just the journal entries. We're talking now specifically about the disclosures. So I'm not sure if you are aware, but in this evaluation of misstatements, there are specific sections of where we will go and document the evaluation of misstatements of the disclosures. So let me just quickly, it is opening up. Right. So this document specifically then has the materiality reassessment there. That was the finalization, normal finalization things we did. We confirmed the final materiality, and then we had to go and conclude about the uncorrected and the uncorrected misstatements, and we had some comments there. In the document map on the left-hand side, you may remember that we had basically like the balance sheet or the statement of financial position, automatically bringing those journals through that we had, some statements, factual and so forth, as they were captured. The same with the statement of comprehensive income, but what we didn't discuss that time was the statement of cash flows. Now, the statement of cash flows, of course, is disclosure, and that won't pull through from journal entries or anything like that. So here, we have to literally go and capture the differences. Technically speaking, what you could do is you could literally go and capture every single thing if you wanted to. But I think that's going to be a bit much, because then you're literally going to have to go to your working paper and go and say cash receipts from customers and type in the number, and then probably have exactly the same number as the audited one with no adjustments. So probably the more, I almost want to say cost effective, efficient way is to say, where are my issues in the statement of cash flow? And now I want to actually just grab that working paper. Was so grateful we were done with that I'd actually put it away already on the floor where I have my piling system. I don't know how many of you also have piling systems, but it was on my pile. So if we get that back and we just see where are all the items where we had problems. So you'll remember we had the one problem with the foreign exchange on non-realized losses or profits. I think it was profits, if I remember correctly. Yes, it was an unrealized foreign exchange profit from the revaluation of payables and receivables. And so there we would go and just find that line item that has it. Now, here's the interesting thing. We actually have a loss line item. So we're going to treat that as the loss, not as a loss. We're going to just use the losses line item for this profit. So what is the difference that we have here? In the disclosure, the what is the word now? The client doesn't have, in the unaudited, there isn't any, but in the audited number, oh goodness, the difference that we have is the value of 5842005. Okay. And so it's not a corrected misstatement, it's under the uncorrected misstatements. Now, is this a factual or non-factual or projected or judgmental? This is factual, it's non-cash. Right, so we need to then include it in there as well as saying 5842005. I guess you might also want to show it as a negative or as a credit because it's an income, so we could do that as well. But at least then show that you have that amount incorrectly reflected there. Good. The other problems that we had were then the trade receivables. Remember, the other ones the client was going to fix. So the client was going to fix the loans to and from companies, group companies, the classification between the financing and the investing, and then also the gross movements. The client was going to fix all of those. This is essentially the one that they are not going to fix, and so that we need to show on the schedule of audit differences. For trade and other receivables, there we have our number is 14 million. So minus 14878,053. I guess I can probably open the working paper for you, right? Let me quickly just show you. Now, I wonder if I saved this working paper. That will be interesting to see. And if I just closed it now. And then while we're waiting for that to open, the client's number is minus 189,67456. Right, so there's clearly a difference there, and the difference is because of the factual difference of 4089 40350. Okay. Okay, and the difference, of course, is a positive. It's the other side to it. Why? Because the client had a 18 million and it's only 14 million. And then with the trade payables, so that one's coming up still. Trade receivables, there we have trade payables. There the client has 31 million. And we have 29 million. And again, the uncorrected misstatement that we have is 175260150. I guess technically speaking, if you wanted to, you could also have all the other differences as corrected misstatements if you really wanted to. Right, and so there then at the bottom here, the net, sorry, the net from operating activities we can then conclude on. We could also, there was another one where I also thought we could conclude. No. Oh, you see the net here is 0. So that's why this is 0. And you can then comment there to say the users in this, okay, or in this client's case, we can document this. Right? So the users will not be influenced. It's not always going to be the case. It's not a default response for all cases. This is just in this case, will not be influenced by this misstatement. And then we can say this is a misstatement between non-cash in operating cash flows and working capital. And then to say the net effect is 0, and the specific line items are also not qualitatively material to the users who are, and then we stipulate who the users are, to explain why we are happy that each of these line items are not individually material and also not in aggregate. It's obviously 0, but then also individually for each of these line items, why they are not material. All right. So that is then for the operating activities. In investing activities and financing, they're going to fix those ones, so that shouldn't be a problem. But then what I also want to show you is the qualitative disclosure table. So we've got right at the top, we've got the statements, each of those 3 statements, but then we also have a possibility or an opportunity for additional disclosure error. So something that's not in the balance sheet, income statement, or the statement of cash flow. And so here, I know it's blue, but the moment you add another line and you start typing stuff, then the headings actually become activated. So here, for example, we could say that there is disclosure, let's say, for example, inventory, or some examples could be the director's emoluments. That's not actually that's not disclosed, or the director's remuneration. That's a requirement from the compliance side, and the client is not disclose that, I mean, then actually say, let's say, directors' remuneration, and we will say, well, the balances are not effective. What is the note number, whatever the number may be, and then actually to document what is the problem. You can also use the comment field because oftentimes the balances as such and stuff is not necessarily going to show it to you. Let's say, for example, there may be another one that's maybe inventory, adding the other line. So this could also be inventory where the total number is correct, but the classification between the categories. So that's now your finished goods, work in progress, and raw materials is not correctly done. So there, yes, there it is possible that you might actually have a judgmental error. Well, let's say they've got raw materials that they are reflecting as finished goods. Now, you'll think, surely raw materials are the things that go into your manufacturing. It can't be finished goods. But maybe the client says, well, there are some of these products that we actually sell off as finished goods to another client. It's little, it's not a lot, maybe 25% or 10% or whatever the case is. And so that we are going to show as finished goods. Then it's judgmental because they believe it is and we believe it's raw materials. But if they use it really purely only in the manufacturing process, then it's factual. And so then we will say that classification error, whatever it may be, 150,000 Rand or something, that will then be the classification error. And we will then have to, again, consider whether that is, in fact, material, qualitatively and quantitatively. Okay. Then we have an overall conclusion. Now, the overall conclusion talks about the journal entries. It talks about all misstatements. So the misstatements in the statements that we had earlier on, cash flow, balance sheet, income statement, this qualitative disclosure, everything in total, and we almost need to sit back and ask ourselves, knowing about all of the mistakes in the client's financial statements. So all of the misstatements, now we need to ask ourselves, are you satisfied that none of the unadjusted misstatements, let me make this a bit bigger for you so you can clearly see. Are you satisfied that none of the unadjusted misstatements are individually material? And if you say yes, then it will sign off and say, this is your conclusion, you are satisfied, none of them are materially misstated. But if you are saying no, then you are actually saying, now, actually, there is an individually material item, and now I need to go and deal with that one. Okay. So that, I'm very, very fond of this list of prompts that just helps us to consider some of the requirements from the standard, because it just helps us to really think about this step by step by step and not just think, okay, thankfully I've completed this, let's move on. All right. Good. So that's then really the software or the tool in the software that helps us to document our understanding or our evaluation rather of the misstatements, specifically in the statement of cash flow, not comprehensive income. There we go, statement of cash flow, and then the qualitative disclosure under notes, and then lastly completing our overall evaluation or overall conclusion about all of the misstatements, again individually or in aggregate, in total. Right, ladies and gentlemen, that has then basically brought us to the end of the session today. And I am then happy to say that's it